We did have an extension of the record high for the Dow off the open today, but as you can see now, it's a wholly different picture. There's the intraday look, and we just showed you the other major averages, which have all gone decidedly red, especially the NASDAQ. Let's show that, because that's where the pain really is. That headline that Oracle is delaying some of its data centers for OpenAI to 2028 from 2027. The delays are said to be, Weiss, largely due to labor and materials, but a delay is a delay. And frankly, anything that calls into question the pace of the build out or the return on the investment is going to make this market skittish. And there it is, front and center in your face today of what that looks like.
Yeah, and I agree with that. And particularly when multiples are at levels that are assuming that you're going to get a quicker return. Look, the reality is, we just sold an electrical contract that works primarily in data centers for 4 times what we paid for it just 2 years ago. Now, there's some M&A that drove that, and that's because of the scarcity for skilled labor. So that is factual. It is also factual that this delays the return on the investment, so you're absolutely right. So companies like Oracle should be down, companies like what we're seeing, across the board, the energy companies, so GE, Vernova, et cetera. However, if people sold Meta because of their CapEx, this should be attractive to them because they're delaying the spending, and by that time, you'll be able to see if there will be a return on the investment. So I would use it as a buying opportunity. I did use it for trade, and it's going to be a quick trade, buying the Qs here. Just
on this sell-off?
On this sell-off, because I think it's wildly overdone. Really speaks to the nervousness in the market, the nervousness about AI, which we saw in Broadcom, which I thought was a really good quarter, and I don't own it. So it's more emotional than factual at this point.
I mean, there's just so many questions. If you're delaying something, Brenda, until 2028, is the demand still going to be there in 2028? Are we going to have overbuilt already by 2028? You're just unable to answer any of these questions. Not you, but us, right? You just don't know. But there's enough skittishness in this market about the AI trade in general that an announcement like this or even a report like this is going to show up pretty dramatically in the market.
Absolutely, and I think you're exactly right. Nobody knows the answer to those questions. And we talk to a lot of managers who who are private credit managers, for example, that are leery of doing any lending as it relates to data centers because there's just a big question about what the long-term outlook is for those facilities and whether all of the capacity we think we're going to need now is really going to be needed in the future. So I think having a moment like this and taking a little bit of the wind out of the sails of some of the AI trade is a healthy development because I think we don't want to get ahead of ourselves, but there's no doubt that this is a huge wave of technological innovation that's going to change a lot of things. But when we think about all of the CapEx and the infrastructure layer, I don't think we want to do a repeat of the telecom build out that happened in the late 90s that then took years to absorb that capacity.
You just don't know whether you're going to repeat that or not until you do. That's the problem with a sea change like this, and when you do a build out like this, you just don't know what's what until perhaps it is too late. I'll come back to the table in a minute, but I want to bring in Seema Mody. He's been following this Oracle story from the get-go. It is a equity story, it is a debt story, and it is this new development, but also what you flagged earlier today, this filing in the 10Q yesterday. Can you just put the whole puzzle together for us today?
Let's start with that headline. The market's certainly sniffing this OpenAI Oracle data center delay story as a financing issue, because remember, the street has been laser focused on Oracle's $300 billion deal, Scott, with OpenAI. So any signs of delays, the market is going to be sensitive to. And yes, it does follow a new 10Q that was filed by Oracle that shows a significant increase in data center leases, which, as a credit investor told me, does raise the likelihood of Oracle going to the debt market sooner than expected. The street was sort of anticipating early to mid 2026. Now the expectation is this needs to happen in early 2026. And then the question is, will it be a jumbo bond sale or a term loan involving banks, which does increase the likelihood of those banks using Oracle's credit default swaps as a hedge. That's one of the reasons we've been seeing CDS surging in recent weeks, Scott.
Yeah, I mean, this week, look at that. I mean, 20% near for the CDS week to date. Seema, thank you very much. Kev, you sold Oracle over the past week. Are you out because of the issues like we're seeing in the markets now, like a report like we get today brings to mind just what's happening here?
Yeah, I wish I could take credit for that, but more candidly, it had a lot to do with just the poor price action. So as the stock has been breaking down over the past 3 weeks, we use a relative exit strategy. So we sold a third at $280, and obviously wish we would have sold it all there. Sold another tranche at $240, and then just within the past week, we sold the last tranche at $200. Not really expecting any more bad news because so much had already been piled on the shoulders of Oracle, which is why when you have something that you need perfection, any like little problem there is going to be amplified, and that's what we're seeing today.
Jim, you still have it.
I'm still hanging on to it. It has now become the more speculative position in my portfolio. And it's a reason why we don't just own one stock, why you blend it with other stocks that are more stable. But I do think that if the OpenAI money comes through, which, Scott, as you were pointing out, we're not going to know, frankly, for years. But if that money comes through, this is a stock that's going to be meaningfully higher from where it is now. And I'm willing to take the risk that OpenAI money doesn't come through, basically at the end of the day, because this is Larry Ellison's company with decades of a track record of being successful. He has, frankly, to be quite honest, risked the company many times before. There's nothing that guarantees he'll be successful again, but he does have a long track record of success.
You got a retort to that, or you take the other side of that, or what do we want to do with that?
Well, I'm not going to do anything with Oracle because Oracle's a different company now than it was. And Oracle is always going to have until they pay down the debt and until, more importantly, OpenAI is able to generate enough revenue to fulfill their part of the bargain.
Jim's take is clearly in Sam and Larry, we trust.
Yeah, well,
right? Altman and Ellison.
Yeah, and I'm not willing to do that. Larry Ellison's got a long track record of performing, and Oracle's a great company. But this is just, again, a different world and what they've mortgaged. And they have mortgaged part of the company.
Man, look at that chart. That is something over the last 3 months.
Yeah.
The CDS blowing out and the equity getting blown out.
Yeah, and I don't mind debt in a company that can afford, that can carry the interest payments, and they can do that in spades. I don't mind that. I think that's actually good financial management. However, you got to look at what the end market is found. The end market is OpenAI, which hasn't been able to generate, and it's difficult for you to forecast that they will generate enough revenue to live up their part of the bargain. And as we've seen over the last couple of weeks, with Google coming in and taking 2 steps ahead of OpenAI, I just don't think you're going to put all your eggs in one basket. And while that's an exaggeration of what they're doing, there's so many other ways to make money in the market playing the AI trade and trying to pick a falling knife in a sector where investors typically don't do that.
Yeah. So for me, it's not a falling knife because I've been in this for 3 years, so I've had a triple in it already. And what I'm willing to say here is that if this goes right, which is a question, there are real risks here. I used the word speculative a minute ago. I'm going to use it again. This is now a speculative stock. But if it comes through, and by it, I mean Larry Ellison, I do mean Sam Altman, I mean OpenAI, this is a stock that 180 right now will be over $300, kind of in the blink of an eye. And by the time the market figures that out, it's already going to be much higher.
But what do you have to see, or what does the market have to see to get this stock to move up that percentage?
It's going to take some time. And by time, I mean another quarter or two, because as Seema was just talking about, it's in the next quarter or two that this funding needs to come through. And that's an overhang right now. We know that. That is part of why.
You really think a next quarter or two? That seems completely unreasonable.
Well, no, because what's really vexing me right now are the credit default swaps. And as Seema just pointed out, that may well be the banks hedging in advance of financing that's going to come in. in over the next quarter or two. But if you get that financing done and the pressure comes off of the credit default swaps, I think people are going to look at a decline in the credit default swaps if it occurs.
It's a
and they're going to say that's a time to get in the stock.
They're a proxy, not just for Oracle, but they're a proxy in a way to hedge the AI trade.
Exactly.
So there's an inflated number there that's not just to back Steve up on this. This isn't just an Oracle story.